And I believe that also US policy will eventually converge towards recognizing the benefits from trade. There is a lot of rhetoric in all of this. If you ask people who are against free trade, they will never tell you that they are against the benefits from trade. They will tell you that they are against some of the negative consequences that some parts of society are suffering. Well, if that's the case, then the focus of debate should not be about trade, but rather how to alleviate the hardship that occasionally occurs. And there are clear answers. Job retraining, trade adjustment assistance, those are fiscal matters. It is not trade policy. Free trade is always better than no trade, and we need to ensure that that it is inclusive and the benefits are shared.
It's interesting. Why do you think that economists like you are more worried about rising protectionism and the economic impact of that than the markets, which are still holding their record highs?
Well, the markets are still holding record highs because of other issues. In particular, what has happened for a long time, interest rates were held and are being held for too long, too low. It pushed the investment strategies towards financial assets, has created occasionally inflated financial markets, has created a disconnect occasionally between financial and the real economy, and that's why I'm so much in favor of normalization and even increasing the pace of that normalization. The US is ready for it. Economic growth is recovering, unemployment has declined to very low levels. In fact, labor force participation is in place, the duration of unemployment is lower, even inflation picks up. What else do you need in order to normalize? And importantly, normalization does not entail only cost that we should be worried about. Lack of normalization entails also cost. It causes distortions, it endangers financial stability, it weakens the financial sector, banking, pension, all of those kind of areas we need to keep in mind when we discuss overall macroeconomic policy. So I think it will be good news if the Fed continues, and if it entails in it also changes in the exchange rate, so be it. They will be helpful.
Jacob, I want to ask you about your view on European banking at the moment in your seat as chairman of JPMorgan International. It's been a tough year, of course, what with Brexit, then particularly Deutsche Bank's issues and the Italian banking issues for European banks. Could private sector have helped out on those issues, particularly when we think of things like Deutsche Bank? Could JPMorgan have stepped in and helped the likes of Deutsche Bank, perhaps even offered to buy Deutsche Bank during those depths of those moments? Was that something that you discussed with Jamie Dimon?
Well, obviously, we do not discuss here strategies of JP Morgan, but I can talk to you about the importance of a strong financial sector everywhere, including in Europe. I must say, if you look today, and I'm not avoiding your question, but I'm only directing it to the areas that are my competence and that I feel more comfortable, the US financial industry today is much more robust than what it ever was before. Capital in the banks is higher, leverage is lower, liquidity is higher, some of the regulations are constructive, and some are not constructive. One of the reasons for the extraordinary optimism in the markets now in the post-election is exactly the fact that people have the feeling that the policies will be somewhat more balanced, more business friendly, and without strong business sector, you don't have a strong economy. And without strong banks, you cannot have a strong economy.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.